Hey everyone, and welcome back to the AI Tech channel. I'm your host, and today we're diving into something that's causing major ripples in the AI investment world, the launch of DeepSeek. Is this just another AI model, or is it a real game changer that could reshape your portfolio? The answer might surprise you. We're going to explore the potential butterfly effect this launch could have, and what it means for your AI investments. Stick around, because your strategy might need a serious overhaul. All right, let's get right to it. The most immediate impact we saw was on Nvidia's stock. We're talking about a significant dip, around 16% at one point, after the DeepSeek news broke. Why? Well, DeepSeek was developed using less advanced Nvidia chips. That's right, less advanced. The market initially interpreted this as a sign that Nvidia's dominance might not be as ironclad as we thought. This isn't just about Nvidia. It's about the entire perception of value in the AI chip space. Are we over-reliant on one company? Are we valuing innovation correctly? These are the questions investors are now asking, and rightly so. This leads us to the crucial point: AI stock valuations. Are we putting too much faith in individual AI stocks? Think back to the NFT craze. Remember how quickly that went from the future of art to, well, not much? The AI landscape is incredibly dynamic. What's hot today could be obsolete tomorrow. DeepSeek is a stark reminder that the playing field is constantly shifting. So, before you double down on that AI unicorn, take a deep breath and ask yourself, is this valuation truly justified, or am I caught up in the hype? This is critical for protecting your hard-earned capital. We're potentially seeing a shift in investor sentiment. That unbridled enthusiasm we've witnessed for all things AI might be giving way to a more cautious and discerning approach. The easy money phase might be over. Smart investors are now scrutinizing the fundamentals, analyzing the competition, and understanding the long-term sustainability of these AI companies. The days of throwing money at anything with AI in the name are, hopefully, behind us. It's time for a more mature and strategic approach to AI investing. I cannot stress this enough. Be very careful about allocating too much of your funds to AI stocks now. Okay, let's zoom out and look at the broader impact. The second-order effects are starting to emerge. First, expect increased competition in the AI chip market. DeepSeek's success with older chips shows that there are alternative approaches to AI hardware. This could incentivize other companies to explore different chip architectures or optimize existing ones. More competition means potentially lower prices and more diverse options for customers. This is a win-win for everyone except maybe Nvidia. Think of it like the Android versus iOS battle. More options drive innovation and benefit consumers. Secondly, the DeepSeek launch could accelerate AI development across the board. Even if it doesn't immediately surpass existing models, it puts pressure on competitors to innovate and improve. Think of it as a technological arms race. Each new breakthrough pushes the boundaries of what's possible, leading to faster progress and more powerful AI capabilities. This is fantastic news for the future of AI, but it also raises the stakes for investors. You need to stay agile and adapt to the rapidly changing landscape. Third, we could see a significant growth in AI infrastructure and services. As AI becomes more prevalent and potentially cheaper to run thanks to models like DeepSeek, there will be increased demand for cloud computing resources, data storage, and AI-related services. This benefits companies that provide these services. This is where the picks and shovels analogy comes in. Instead of trying to pick the next AI winner, invest in the companies that provide the tools and infrastructure that all AI companies need. This is often a less risky, but still potentially very rewarding approach. And finally, for those of you who are feeling a little overwhelmed by all this, consider investing in AI ETFs. ETFs like the Invesco QQQ ETF or the Vanguard Information Technology ETF provide diversified exposure to the AI sector, reducing your risk and potentially smoothing out the volatility. This is a great option for investors who want to participate in the AI revolution without putting all their eggs in one basket. Think of it as a more balanced and diversified approach to navigating the AI landscape. Now, let's look even further down the line at the third-order effects. This is where things get really interesting and potentially a little scary. First, we could see the democratization of AI access. If DeepSeek or similar models can provide competitive AI capabilities at a lower cost, it could empower smaller businesses, researchers, and individuals to leverage AI for a wider range of applications. This could lead to broader economic growth and innovation, leveling the playing field and unlocking new opportunities for everyone. But here's the thing. AI's increasing capabilities, especially agentic AI, raise serious questions about the future of work. As AI becomes more sophisticated, It can take over many of the processes that people currently handle. This could lead to job displacement in certain sectors, requiring workers to adapt and acquire new skills. I know this is a sensitive topic, but we need to be realistic about the potential impact of AI on the workforce. The key is to prepare for the future by investing in education and training, and by supporting policies that help workers transition to new roles. As AI becomes more powerful and pervasive, ethical considerations become paramount. Bias, privacy, and security are just some of the challenges we need to address. The development and deployment of AI technologies must be guided by ethical principles to ensure that they benefit society as a whole. This isn't just a philosophical debate. It's a practical concern that could impact the long-term success of the AI industry. Consumers and regulators are increasingly demanding ethical AI practices, and companies that fail to meet these standards risk reputational damage and legal challenges. The rapid evolution of AI demands a fundamental shift in education and training programs. Individuals need to acquire new skills in areas such as AI development, data science, and AI ethics to thrive in the future workforce. Our education systems need to adapt to the changing demands of the job market, providing individuals with the skills and knowledge they need to succeed in the age of AI. This is an investment in our future, and it's crucial for ensuring that everyone can benefit from the AI revolution. The potential economic benefits of AI are enormous. As the article points out, generative AI could be worth trillions to businesses. If AI can automate tasks, improve decision-making, and enhance productivity, it could lead to significant efficiency gains across various industries, boosting economic growth. This is the upside of the AI revolution, the potential to create a more prosperous and efficient world. But we need to be mindful of the potential downsides and ensure that the benefits of AI are shared equitably. However, the rise of AI could also lead to economic disruption. Certain industries and business models could become obsolete, requiring policymakers to address these challenges by providing support for displaced workers, promoting innovation, and ensuring that the benefits of AI are shared equitably. This is a complex challenge that requires a multifaceted approach. We need to invest in education and training, support entrepreneurship and innovation, and ensure that everyone has access to the resources they need to adapt to the changing economy. Now, let's talk about the risks. And trust me, there are plenty. First, technology risk. The article emphasizes how quickly the AI landscape is evolving. DeepSeek's emergence proves that new competitors and advancements can rapidly disrupt the market, potentially making existing technologies or companies less valuable. This isn't a one-time event. It's a constant cycle of innovation and disruption. So, how do you protect yourself from technology risk? Diversification, diversification, diversification. Don't put all your eggs in one basket. Spread your investments across multiple companies and technologies. Next, business risk. The significant gains in AI stocks like Nvidia and Palantir raise concerns about a potential valuation bubble. Are we seeing irrational exuberance in the AI market? The comparison to NFTs should give you pause. Don't get caught up in the hype. Do your own research, analyze the fundamentals, and be prepared to sell if the valuations become unsustainable. Remember, trees don't grow to the sky. Finally, ethical risk. While the article doesn't explicitly address this, the potential for AI to displace workers and perpetuate biases raises serious ethical concerns. Companies that fail to address these ethical challenges risk reputational damage and regulatory scrutiny. As investors, we need to hold AI companies accountable for their ethical practices. Support companies that prioritize ethical AI development and be prepared to divest from companies that don't. So, what's the takeaway? The DeepSeek launch is a wake-up call for AI investors. It's a reminder that the AI landscape is dynamic, uncertain, and full of both opportunities and risks. You need to be cautious, diversified, and willing to adapt your strategies as the technology evolves. Don't get caught up in the hype. Do your own research and be prepared to change course if necessary. The future of AI is bright, but it's also uncertain. By staying informed, being disciplined, and managing your risks, you can position yourself to profit from the AI revolution while protecting your hard-earned capital. Thanks for watching, and I'll see you in the next video. Don't forget to like and subscribe for more AI investment insights.